Oil trading giants Trafigura and Vitol are going all in with a rare bet on a Russian megaproject in Siberia, and the size of the hedge could make or break these traders. Trafigura originally bought a 10% stake in Russian Rosneft's Vostok oil project when oil prices were below $50 per barrel and oil demand seemed unlikely to recover from the pandemic. But forecasts have since changed. Oil is now hovering in the $70 range, and demand should hit pre-pandemic levels in 2022. Siberia suddenly looks more promising. That prompted another giant commodity trader, Vitol, to jump in on the Vostok oil megaproject too. Last week, in a consortium with Mercantile and Maritime, Vitol sealed a deal with Rosneft for the acquisition of a 5% interest in the project, which Reuters has compared with the oil development of Western Siberia in the 1970s and the gigantic U.S. Bakken shale play. With reserves estimated at 2.6 billion tons of crude, equal to some 19 billion barrels, Vostok oil is a behemoth. It is expected to produce up to 100 million tons of crude annually at full capacity, but that may be conservative. Rosneft itself estimates the reserves of the fields at up to 44 billion barrels. It's also enormously expensive, with lifetime development costs coming in at an estimated $140 billion. But it's the profit margin Trafigura and Vitol are eyeing. Even if oil fell to between $35 and $40 per barrel, Vostok would still be profitable. The big hedge is that no one seems to have a handle on demand forecasts. The International Energy Agency has been contradictory. In May, it called for an end to new oil and gas exploration investment by 2022. In June, it called for an increase in production to meet rising demand. Trafigura and Vitol are clearly hedging on solid, long-term demand with Vostok, and they typically wouldn't invest directly in upstream oil and gas projects, and especially not when the world is in the throes of an energy transition. If they're right, it will be the hedge of the decade.